Thank you for joining us. We are discussing multi-baggers, my friend. CG Power, Indian Hotel, Tata Motor. The market is PSU stocks. It's just amazing, right? I mean, 3 years, some stocks have given 50 to 100x returns.
I think we are definitely in a bull rally since the COVID lows, and market itself has gone up more than 100% when you look at the large cap index, and when you look at small cap or mid cap indices, they have also done much better. And within that, there have been several multi-baggers. Definitely, it's been a great rally that we have seen in Indian markets for the past 3 years.
Harsha, what do you make of the Sebi alert or notification which went to AMFI, and AMFI has written to mutual funds that, guys, be careful, be careful, be careful, buyer beware, put systems in places in the small and the mid cap space. Do you think that will have detrimental impact on flows and the way how mutual funds are doing risk management?
Nikunj, I wouldn't think so, because some of these risk controls were always there. Probably it was not in the public domain in terms of what our investment committees and our fund management team used to look at. Now there is a uniform standard format, and within which the AMFI will disclose all the funds which are in that category in terms of the risk disclosure. So it's a standardized format which will enable investors to look at individual funds within mid-cap category and small-cap category and see where the liquidity is, what is the investor concentration, how concentrated is the portfolio, various other things. Some of these were anyways there in the fact sheets of individual funds, but going forward, it will be available on AMFI website. So that's the only difference. So to that extent, I think it's just an increased level of disclosure, nothing to worry in terms of anything else in the industry.
Right. Morning. Wanted to also understand your take on, some of the top themes that are really in the spotlight. For instance, generative AI, digitization, all of that. How do you see that changing the landscape for the entire IT space and really newer age tech companies adapting to these big technologies?
One, it's too early to comment on which companies will be really leaders in these segments. Right now, many of the incumbent companies are attempting. There are many startups which are working. They may not be in the listed space today, but over the next couple of years, definitely there will be more of such companies coming into the listed space as well. So over the next couple of years, I think the landscape will be a lot clearer in terms of who is going to probably lead this space, etc. But I'm sure all the companies in the IT segment are looking at this change, and nobody can stop technology coming into reality. So to that extent, I think the opportunity is definitely in front of everyone. We need to wait and see how many of those companies will be able to capture that opportunity and how soon.
Thoughts, you made a very interesting point that really sort of stuck out, saying that, erratic reaction to results are showing investors could be nervous at these valuations. What do you think could spoil the party?
Aisha, clearly the fundamentals are very, very strong. So no doubt about that. Whether you look at economic backdrop, whether you look at corporate landscape, I think the fundamentals have been very, very strong at this point of time. And if you look at the next several weeks, it's going to be quite event-free in that sense. So I think the flows and sentiments will dominate the market. So depending on the flows and sentiments, you will see the short-term movement in the market. But from a longer-term perspective, we still continue to be very positive on markets. We may not get the kind of returns that we have got in the last 3 years, but that doesn't mean that equities as an asset class will be inferior to many other asset classes. Equities will continue to really give decent returns in our view. Just that the volatility could increase given higher valuations at this point.
Given how steep the run-up has already been in the broader markets, would you say keep a larger allocation right now to large caps? That's where you are safer, perhaps?
Yes, Aisha, that's a prudent view. I don't know whether everyone will adopt that, because if you look at the recent returns, large caps have definitely underperformed mid and small caps. So many retail investors generally look at past returns and try to take positions. That's where we are making such statements indicating that this is a segment which is relatively better in terms of valuations. It's not that mid and small caps will not give returns or correct a lot at this point of time. It's just that from a risk reward perspective, probably it makes sense to have a little bit of tilt towards large caps, and that's what we have been suggesting to most of our investors.